Yo, you know, if you were doing this by yourself, it would be difficult, right? Never hunt alone, baby. Neverhuntalone.com. That's like the back door to the insuranceschool.com where we make it easy. You can't tell me that those videos you just went through explaining types of policies all the way from term and whole life and universal and explaining the interest sensitive part of like the index and the variables and how the variable policies, that's kind of like, that's the risky, right? High risk, high reward. But now let's talk about the life insurance contract. And actually, this isn't just the life insurance contract. This is just contract law, okay? So when we're talking about life insurance, first of all, if I was your agent and I sit down and I show you the application, when you get all those when you get that application, that paperwork from me, are we negotiating? There's no negotiating there. You take the terms, right? Just as I give them to you, you adhere to the terms. Remember that insurance contracts are contracts of adhesion. They're aleatory because the amount that we exchange could be different, right? The amount I pay for premium might not equal what the benefit is. Vice versa, if I'm in a term policy and I'm paying for 30 years and I don't die, I get nothing, right? Aleatory. The amounts we're exchanging are unequal. Now, let's talk about the actual insurance contract, though, okay? So the first thing you need to know is that when I give you the contract, nothing that's not included in that contract, that if it's not written in there, attached to it, identified as an addendum, it is not part of the contract. That is called the entire contract provision. Oh, entire contract provision, okay? All that means is that when I hand you the paperwork and I hand you the contract, if it's not in the paperwork, it is not part of the contract, okay? So, super simple. The other parts of this is you're buying insurance, right? That would mean there's going to be an insuring clause. What is that? Well, we know it's not a promise we're making, we're buying. I'm insuring me. You're making a promise, and that's exactly what this is. The insuring clause is the insurer's promise to pay a benefit when you kick the bucket, okay? Or according to whatever the terms and conditions are in that, because there's other ways to get paid, right? Remember we were talking about universal actually has that accidental, that double indemnity aspect to it. You know, there's other ways to get paid here. But regardless, I'm not trying to get too far off track here. The insuring clause, that's part of the entire contract, is the insurer's promise to pay, okay? Now, in reference to your promise to pay, I wouldn't exactly call it a promise because if we don't pay our policy could lapse, right? They could just cancel it. It's our right. So anyway, with us, what we get is a consideration clause because you can't have a contract. You have offer and acceptance, right? They're making us an offer for insurance. We're accepting that offer. If we accept that offer, we have to provide the first premium payment along with that application. That's the consideration, right? Well, this consideration clause just is the part of the contract that identifies how much the premium payment is and the frequency of the premium payment, okay? So we have the entire contract provision that just makes sure that no one can add anything to the contract without your permission. Now, of course, you can add something to the contract, but both parties have to agree after it's been put into force. We have the insuring clause, which is the insurer's basic promise to pay upon that occurrence, which in this instance, we're talking about life insurance. So what is the occurrence? It's death. In the consideration clause, that's just the payment of premium payment amount and the frequency. Now, with this, we're talking about the contract. That means that I delivered it to you, okay? When I deliver you the contract, that's a clever word because really the way that the state wants us to, they say the proper way to sell a life insurance policy is not only do I explain it to you and I do a needs analysis, but when I take your application, I submit it and the insurer says, yep, let's do it. Here's your policy. I'm supposed to deliver your policy. When I deliver it to you, it's actually already enforced. From that moment right there, you still can get buyer's remorse. You have 14 days, 2 weeks later. If you don't want your policy, you can return it. Free look. Free look means that I just told you that there was a consideration clause. In order to go ahead and create the policy, you had to sign on a dotted line and give me the first premium payment, right? Well, after you give me that first premium payment and I deliver your policy, if you change your mind for whatever reason, you have 14 days to do so. And if you decide to turn it back in, I give you your premium back, no questions asked. It's called a free look, okay? That is it, 14 days. Now, there's a difference between the free look provision and a grace period, right? Because in the free look provision, you just signed up. I'm now delivering you the policy, and you're just making sure that it really does suit your needs, right? When we talk about a grace period is a little bit different because the policy is already in force. So let's say you chose to make your premium payments every single month on the 1st, right? And it's just like with anything. Your due date's on the 1st, but they usually give you like a couple of days there to the 5th before there's a late period. And then after the 5th or something like that, maybe everything stays in force until the end of the month, right? Like 30 days. Grace period is the same thing here, okay? The policy is already in force. If you didn't pay it on its due date, that's the 30 days that you have to go ahead and pay your policy without having to worry about it going to lapse, okay? That's your grace period. Gives you an extra 30 days. So your free look is only 14 days. Your grace period provision is 30 days because all of your months, there's no month with more than 31 days, right? So in that instance, if it was due on the 1st, 30 days later, that's your next month. So grace period. Your free look means I delivered it and you might want to get rid of it for some reason or another. Your grace period, it's already in force. You were supposed to pay it on the 1st. You got 30 days to pay it before you're late. All right? Now, we want to talk about a reinstatement provision because if we're going to talk about grace periods, we're going to talk about what happens if it's beyond the grace period and your policy lapse. Well, you have a reinstatement provision. But this is kind of a big deal here, right? Because the reinstatement provision, we're talking about 14 days on the free look. We're talking about 30 days on the grace period. But some of these reinstatement provisions could be years down the road, okay? So the reason I say it like that is because throughout this entire course, I keep on telling you that everything is written in our favor as the consumer. It's not in the insurer's favor, right? And then we see this reinstatement provision and you hear, oh, well, they're going to let me reinstate my policy. And you might think they might let you do it without evidence of insurability. But the fact here is that if you look at it, and when I say you look at it, I'm assuming that either you guys are in my content, which is Superfly, and that means that you're on, what's our page right there, right? It's lifeinsurance.wtf. You know how we get down. And then you get your mind out of the gutter, right? Because if you didn't realize it by now, it's what's the future, okay? Life insurance, what's the future, all right? I don't know, where's this world coming to? Okay, so with this reinstatement provision, this one, you may be asked to provide evidence of insurability because you might be trying to reinstate this policy 2-3 years later. Now, I don't know, we're not really going to test you on time frame here. Just know that if you're going to be reinstated, there's a possibility that how many payments didn't you make? In order to be reinstated, you got to make those late payments. Did you pay back your policy loans? Those would have to be repaid, right? Now, with that, you might have to prove insurability as well. So now the cool thing about this is there's a couple of provisions like exclusion periods. And with life insurance, we haven't really talked about this, but did you know you can get paid on your life insurance policy for offing yourself? Yes, suicide pays, but there's about a 2-year exclusion period. So as long as you can hold out and not be majorly depressed and kill yourself for 2 years, you can actually get paid on that. The theory is that if you got your life insurance policy today, in 2 years you would talk yourself out of killing yourself. But regardless, if you go with this reinstatement, you might have to prove evidence of insurability, because earlier in the class we talked about adverse selection. That's the tendency of people who have ailments to go seek insurance. So if you're trying to re-enter your policy after it lapsed, isn't it possible that you have some issues? So you will have to prove evidence of insurability. You will have to bring the policy up, right? But you won't get any new exclusion period. So if you did, you're feeling a little down in the dumps, no new suicide exclusion period. What? All right, well, anyway, let's talk about this suicide period, all right? The suicide provision is just that there is an exclusion period in there, an elimination period, we could say. And the elimination period is, look, how long are our appointments with our insurers? 2 years. How long is our compliance period for continuing education? 2 years, right? How long is the average exclusion period for suicides and things like that? 2 years. Get it? Get where I'm going? No, this class, no one wanted to be original. We didn't come up with a whole bunch of 18 months and 36 months. No, when in doubt, 2 years it out, all right? So here we got the suicide provision. You get it. You can actually get paid for offing yourself. I think that's crazy. Absolutely crazy, man, crazy. So we talked about how even though the insurance company is responsible for writing the contract, there's no negotiating here or anything. The truth is that since they wrote the contract, since we're stuck, we must adhere to the terms of the contract. Truth is that if we ever had to dispute something, the laws are favorable on our side. Because when we fill out the contract and we fill out the application, everything that we say is considered a representation, which means that it's not guaranteed to be true. It's true to the best of my ability. A warranty means that it's guaranteed to be true. The reason I bring this up is because the next thing that we're going to talk about is the incontestable clause. Let me ask you this. How long do you think, you don't even know what the incontestable clause is. How long do you think it is? 24 months. Got it? Got it? Not one of you better answer anything 18 months. I'll be so irritated. I'll put it up there on Front Street. Well, with this incontestable clause, what it's saying is that the insurer does not have the right to cancel your contract even if you lied on your application, right? So as long as that policy stayed in force, they can't contest the claim. Incontestability, that's awesome. Remember, it's the difference between representations and warranties. Warranties are guaranteed to be true. Representations are true to the best of our ability. If we answered every question to the best of our ability, why should they have the ability to cancel our policy? Doesn't make sense, right? Incontestable. It's in our favor. Now, let's see what we got. The assignment provision, ... If I'm going to assign something, I am giving away my rights to it, correct? That's what an assignment is. So an assignment provision, we're here talking about life insurance. Well, it would be the benefit that I would be assigning. So in this instance, we have two types of assignments. We have your irrevocable beneficiaries, right? Like, so me, I got my Kelly. Look, Kelly puts up with all my crap. Do you think that she's going to let me leave and allow me to put any kind of benefits and give them to anybody else? Hell no. Irrevocable. She ain't having it. Once I appoint her as my irrevocable beneficiary, she is my absolute assignee, right? Assignment. That is irrevocable. That means I am the policy owner, but she owns the benefit. Only she can assign the benefit to somebody else once she's been named as an irrevocable. Your other type of assignment, remember when we talked about your depreciating term insurance that we use to collateralize a debt like a mortgage? That's what the other assignment is, because it's either you're appointing a beneficiary or you're having a collateral assignment there, right? So the collateral assignment is really you're assigning your benefit as security for something or other. Right? Now, in reference to simplifying the assignment, just think about assignment from the vocabulary standpoint, and you're giving away something. You must own it to give it away. So the assignment provision, in a nutshell, details how to transfer your insurance benefit or property. Now, let's see. That brings us to the accelerated benefits provision, right? Well, accelerated benefits. If you have a life insurance policy, when does it pay? When you die, right? Accelerated benefits pay you in the event you don't die. So here with the benefits, like let's just say you're diagnosed as terminal, right? You only got 3 years to live. Your policy will pay you a little bit up front because, man, it's quality of life, quality of life. So just remember, an accelerated benefit is just, it's some amount of the face amount. It could be all of it. It could be, you know, like with your universal policies, you have that accidental death and dismemberment aspect to it. But regardless, accelerated benefits, life insurance, it comes when you died. If you got accelerated benefits, you got it before you died, okay? Now this one's funny because this is what you got to think about. I just told you about warranties and representations, right? Warranties guaranteed to be true. Representations is to the best of my ability. Your age is actually a representation. I can tell you, like right now, I've been telling you this whole class, you know, my age, but I feel like I'm 28 inside. So let's just say, you know, I want to go ahead and I fill out my application and I identify as a 28-year-old and I put that down on there, and you know, they look at me, I look young as hell. What are you talking about? This is magnificent, right? No one's going to believe I'm 48. So I get away with it for a little bit. I'm still alive. It's like 10 years later, and they look, and I'm over here on Facebook, celebrating my 58th birthday, and they're like, yo, Jay, wait a minute. You told me you were 28 years old. They actually couldn't cancel my policy for that. What they would do is rate my policy up. So if I went ahead and I got that policy under the false assumption that I was 28, not 48, right? How much would that have lower premium? How much insurance would that lower premium have purchased me as a 48-year-old, right? So the policy would be adjusted to reflect the amount of benefit I could have afforded had I told the truth. Now, what's good for the goose is good for the gander, right? So what if, you know, I identify as an old dude and I still got qualified and I'm like, oh, I feel 50, right? Well, in that instance, the same thing happens. If they find out while I'm alive, they could just adjust the premium to adjust the benefit, all that stuff, but it's just an adjustment. You understand? They don't have the authority to cancel the policy. Now, if I did die and they found out, same thing holds true. The benefit would be adjusted to reflect the amount of money I would have purchased under that correct age. That is your misstatement of age and sex. And sex, by the way, okay? Because you could identify as a dude, but if you got an innie and you're able to get pregnant and you need maternity benefits, we're going to know what's up, right? Well, we would imagine that that would be one of those things that might rate your insurance a little bit different. Even that isn't enough to go ahead and cancel your policy. It would just be adjusted. So just remember, because these are representations, not warranties. Warranties would insinuate it's a material misrepresentation, a lie, fraud, right? These are representations, best of our ability. Now, one of the really cool features in life insurance is an automatic premium loan provision. This right here, this authorizes the insurer. Remember I told you had cash values? Those cash values, you could take a loan against it, but they could be used to go ahead and keep making your premiums to keep your policy in force, right? So that's what an automatic premium loan provision is. It authorizes the insurer to withdraw from the policy's cash value the amount of the premium due if the premium has not been paid by the end of the grace period. That, my friends, was compliments of the NAIFA handbook. You know where to get it. NAIFA, National Association of Insurance and Financial Advisors, right? What kind of laws do they make? Blap, nothing. National authorities do have no authority around here. They just make suggestions. They make suggestions. Only the CFO is the jefe around here with those quasi-legislative, quasi-judicial authority, so they can go ahead and hold trials and hearings and all kinds of stuff and propose laws. I am only a bill. And right there, we finished going on. What did we finish that section, didn't we, David? Boop. Deuces. I'll see you in a little bit when we talk about how to continue into this life insurance, modifying contracts and your rights. That was 20 minutes. I couldn't get it any quicker. But I figure let's just